Right, welcome everybody for a special episode of the Bitstocks podcast, actually hosted by yours truly. My name is Michael Hudson. I am the CEO and founder of Bitstocks, and this podcast will be available on our YouTube channel, Spotify, as well as downloadable on iTunes. And I'd like to introduce a very special guest for my first podcast on the Bitstocks TV platform. That is none other than Dr. Craig Wright. So just a quick 30-second introduction into yourself, Craig. Craig is the chief scientist at nChain. And I first met Craig best part of 2 years ago, and I asked Craig a interesting question. So before we get into that, if you don't mind giving us a heads up as to your background, what were some of the dominoes that led you up to Bitcoin and what you've been doing in Bitcoin since?
Thank you very much, Michael. I'm delighted to be here speaking to you. So my background, I've been involved with technology about forever. That goes back way back to the 80s. And from there, I've been involved with the sort of growth of some of the first ISPs, with a number of networks that popped up in the 90s, with taking the Australian Stock Exchange and helping them go online securely back in the early days. Starting my own company involved with security, being involved with a whole lot of online gaming and other such companies. Then throughout this, being involved with banks, digital money, and other such things. So since the last about decade, I've been involved fairly much exclusively on Bitcoin. I actually took a golden handshake back in January 2009, which allowed me to waste a bit of time for, well, several years before having to really go out there and do anything.
So for the sake of the listeners as well as myself, golden handshake?
Golden handshake is after the sort of 2002, 7 and 8 type failing of all the economies around the world. I was working at a firm called BDO, which is an accounting firm, and they basically offered me a redundancy package to go off into the sunset and just sit on their money and do stuff which I could have probably paid off the home mortgage, but I didn't.
The entrepreneur in you. Yeah. Right, so probably a good time to give a bit of background story as to how I first came across you, Dr. Wright. So I came across Dr. Wright back end of 2015, I believe it was. A lot of the commotion that came out around the Satoshi story. And I found it interesting for a variety of different reasons. What I found more interesting was the intellect of the information, the level of the information it was that you was coming out with. So that had you very much on my radar from that moment. And a lot of the noise and distortion I wasn't really that interested in. I was more interested in what was he actually saying, and does some of this stuff actually check out? So that set me on a bit of a journey, because one of the fascinations that I have is, how does the universe really work? What are the relationship behind certain numbers? What is the relationship of these numbers with biology and really everything? Then you burst on the scene Arnhem in Netherlands. And if I'm not mistaken, the mic is handed over to you from John Matonis. And it's the first time since that event where you was pulled into the limelight, where you got an opportunity to create your own narrative and to really speak for yourself. So I remember it's actually this building where we were. We work in Chancery Lane. And I remember watching the video. And then you eventually get to a point where you speak about the Bitcoin network and you show a diagram of the Bitcoin network. At this point, I almost fell off my seat, because what I saw instantly was a frequency. I saw a frequency. I saw a certain geometric relationship with what it is that you showed on that screen. I knew it tied into a lot of the things that I was looking into with how the universe works, but I didn't know exactly how it all tied in. But I saw it as something there. Then you mentioned certain things like Wolfram and Gödel and ultimately complete mathematics. So that then had me researching and looking into this information. Then the Hong Kong Shape the Future conference. I actually flew out from London to Hong Kong just really to ask you a question. So when I first bumped into you, the question that I asked you was, is Bitcoin and the mathematics of Bitcoin inspired by sacred geometry? Then we had a brief conversation about Bitcoin being biologically inspired and the mathematics behind Bitcoin. And that was a little bit of confirmation of my thought process, but it wasn't total confirmation because it was still an elementary thought process at that standpoint. So really the question is, before we get into the depth of this, what do you mean by your statement, Bitcoin is a biologically inspired network?
One of the things I studied in the past was a science called biomimicry, which is more technology in reality. So from that, you can look at how nature actually functions and how disparate systems distribute themselves, etc. So if we look at Bitcoin, we have effectively an SEIR network. So this is a model of propagation that works basically within nature. And we have a model of competition similar to anything in nature. And like it or not, we live in a competitive universe. Things compete. If you don't compete, then you're not alive. And we can talk about rocks and other such things, but personally, I think mostly they're boring. Life is what really makes things interesting. Now, that said, I don't know if I agree with the nature of sort of what you're saying with sacred geometry. I think that's more like if you take the Pythagorean cults. They see something in nature and they make more of it than there is. Rather than using that as a fact that we can then try and delve deeper into the science of how things work, people use it in the wrong way to explain things magically. And I don't really like the concept of magic. I like more the concept of things we don't yet know. So when we look into science and technology, we have to consider not what is basically considered by most people to be correct, but science is more about a understanding that you're discovering the best description at the time, something that will allow you to make predictions, to describe the universe, etc. And people should not be ashamed of the fact that they're wrong, because everything we come up with will be wrong. There's no way that we will ever come up with the perfect model of the universe, because such a model would have to be at least as big, if not bigger than the universe. And that's not going to work.
And that's, I guess, Wolfram's issue, right? Because Wolfram said there's not enough data out there to compute and simulate the universe. It's not stopping him from trying, but there's not enough data out there to allow him to re-simulate with things like cellular automata. So going into that then, quickly, let me just make a statement first, just to make sure that the right context is being applied here. My life journey is just a continuous, day-by-day mantra of learning to teach and teaching to learn. So whenever I tackle a subject, irrespective of what that subject is, I'm viewing it with the view to be enlightened, not with the view to debunk, defame, or to say that someone is wrong. It's always with a view to be enlightened. So I'm always willing to do a 180 on my stance based on this view. Now,
as you should, really.
Yeah. Now, this Nikola Tesla famous quote. Nikola Tesla said that the secrets of the universe can be found within the numbers 3, 6, and 9. What do you think Tesla meant by that? And does that tie into biology and potentially even Bitcoin itself? Because I feel that I've made some connections with this statement by Nikola Tesla that ties into biology, also what Wolfram is working on, and why Bitcoin actually, I agree with you, why I feel Bitcoin is Turing complete.
I think Nikola Tesla was a little bit like most people who are geniuses through history, and a little bit crazy and wacky. But then people say that about me, and if we look at most people who were actually sort of did anything that left society completely different, they were wacky in some way.
Tinfoil hat, kook, conspiracy theories, crazy.
Yes. Generally, yes. Do I agree with him? No. If I had to pick numbers, I'd pick things like pi, e, and other things like that. I like my irrationals, the things that the Pythagoreans hated and tried to actually kill off people for.
So just for our listeners, to provide some context, maybe some numbers, and for them to play around with. So just to elaborate on the Tesla statement. So Tesla, who was absolutely fixated with the number 9, with the 3, 6, and 9, he will circle a building 9 times before he enters it. He will only have a hotel room if the numbers add up and divide down to 3. He was, to an OCD level, consumed by these numbers. So looking into the relationship of 1 to 9, certain patterns form. So you've got 1, 2, 3, 4, 5, 6, 7, 8. If you add those numbers up, it provides you 36. 3 and 6 added together gives you 9. And then the Fibonacci pattern. So, and this is also ties into what Stephen Wolfram's speaking about with Rule 110, which you claim and state is in Bitcoin, or at least it was running in Bitcoin up until 2 years ago.
Simple automata are actually not terribly difficult.
So you start with a primitive, right? 0 or 1, white or black, on or off. So in this, if we go back to this number sequence, and I believe what Tesla tapped into, so if 1 is your first primitive, then you double. So 1 plus 1 equals 2, 2 being your next base reference. Double that gives you 4, 4 being your next base reference. You double that gives you 8, 8 being your next base reference. Double that gives you 16. Can't accept that as a dual number. 1 plus 6 equals 7, gives you 7. 7 is your next base reference. Double that gives you 14. 5, and then 5 takes you back down to 1. So you have this pattern. There's no mention of 3, 6, or 9 in this pattern, this Fibonacci pattern. But then if you then take 3 and 6 and you apply the same, you double them. Double 3, it gives you 6. You double 6 gives you 12. 1 plus 2 then gives you 3. If you half 3, it gives you 1.5. 1 plus 5 equals 6. If you half 6, it gives you 3. 3 plus 3 then gives you 6. These are polarities. So you've got 3 always computes to 6, 6 always computes to 3. Both of them always gives the other side, the other number. Then you model this out. And you follow this pattern, this relationship. And then ultimately, the pattern that creates itself is this pattern here. And I've seen this pattern in Wolfram's work. So for the listeners, just so the listeners know what it is that we're looking at right now, is ultimately the affinity symbol, right? So you've got the 1 to 2 to 4 to 8 to 7 to 5, then back down to 1. And that creates ultimately the infinity logo. Funnily enough, Rolls-Royce uses that logo and their symbol. 3, 6, and 9 are not within that infinity pattern. You apply 3 and 6 and add them together, it gives you the 9. And this is where Tesla is speaking about all the secrets of the universe can be found within the relationship of 3, 6, and 9. And then what I then done is, and I took that and I applied it to a circle having 9 at the top of this circle. And then it's a question of, okay, so what is 9's role in all of this? So if we have a circle is 360 degrees. 3 plus 6 plus 0 will give you 9. And then you have half a circle, 180 degrees. It gives you 9. 4 triangles within a circle, 90 degrees, again 9, and this just keeps on going. If you keep on halving 9, what's very interesting about the number 9 is that 9 will always, whether multiplied or divided, will always equate to 9. So 9 plus 9 is 18, 1 plus 8, 9, 4.5 half, 4 plus 5, 9, then 2.25, then etc., etc. Is this baked into Bitcoin? Is there parts of that in terms of the way that the Bitcoin network works? And if you keep dividing the connections, ultimately, you're building density within the network itself. Till eventually you get to a point where you have true connectivity, where this central point that you can see building in the middle ultimately disappears because it's all the middle, it's all the center.
Yes and no.
Okay.
Now, what you're doing is you're taking a Pythagorean set of mathematics that were around for quite some time, used to explain many things. The whole idea of hypotenuse and square and whatever else, and building ancient structures was all based on this.
Yeah.
So
Stonehenge was based on this. Chartres Cathedral.
I don't know about Stonehenge personally, but the pyramids and other such things. Now, the problem you have is that it's not complete. So in Pythagorean terms, they actually came up with the fact that you can't square a circle. And someone actually found out and discovered irrational numbers. And we know that now. We've found old texts and other such things that were there. And because it was more of a cult and they wanted this as their perfection of the universe that people get hung up on, they literally drowned the guy. So they sacrificed one of their people so that he wouldn't talk about these evil mathematics that didn't perfectly work out.
Not willing to accept it in my reality, therefore...
Exactly. They'd made it into a religion rather than mathematics. Now, that actually held back humanity in many ways, and that's where we get people going wrong. So it's not just all of this, it's much more. And
I agree.
There are areas, I mean, looking at this in that way limits you. If we look at things like the works of Mandelbrot now, to make you go down further little rabbit holes later after this, what we start seeing is that all of finance is fractal. Now, in that doesn't just mean the pretty pictures people see. That means we don't really have any number that describes dimensionality. So we love to think how we have a dimension up, down, left, right, whatever else, and we have the typical three-dimensional space where we can draw Cartesian planes.
And the fourth dimension will be time, right?
If you consider time a dimension, but that's a different thing. Now, the problem there is then we're getting into a state that doesn't really describe nature or the reality of the universe. We're not in a Cartesian universe. So mathematically, the idea of parallel lines never meeting, great, until you realize that space-time is actually curved, and hence you can actually create different geometries that allow you to actually have parallel lines that meet, or triangles with angles that add up to more or less than 180 degrees, or all sorts of other fun things. Now, where this is important, though, is the fractional, the fractional dimensions that we end up with allow us to describe a lot of finance and mathematics. We don't have the data to be able to do it, which is always the problem. I mean, part of why
for, again, sake of the listeners, so we're speaking about fractals. So a fractal, from my understanding, is a certain geometric arrangement which has its entirety. So it could be the smallest thing in the universe and it could be the biggest thing in the universe. No matter how much times you zoom into that, you will always see the same geometric principles.
Yes, and in a way it's interesting that things like the measurement of a coastline are something that Mandelbrot covered as a fractal. If you measure at a large scale, the distance around a country is different to if you measure at lower and lower scales. For instance, if I take a picture of a map and I look at Norway and all those lovely fjords and things like that, I draw around there with a piece of string, I get a certain measurement. Now, if I take that map and I make it larger and I have a better scale, then there are more squiggly lines. So actually I get a longer measurement of how long the coastline is. If now I come and I look at it in a 1-to-1 scale, and I'm going to measure every stone, every little crevice from the sea to where I am, it's longer again. Mm-hmm. If I now take it down to the level of sand, my coastline is longer. Mm-hmm. The atom, longer, etc. So, interestingly, some of these things, what is the true measurement of a coastline? At what scale is a question you have to ask. So if we want to say, what's the circumference of, say, the UK, then we can answer that and say that it's so many miles, or we can say, well, actually, it's so many miles if we draw the map at this scale.
Yeah, yeah. I get that. And that also kind of ties into, I guess, the Earth, the diameter of the Earth, and also the diameter of the Moon, because if you've got, say, again, going back to geometry, platonic solids, right? Tetrahedron, dodecahedron, icosahedron, etc. You then add up the angles on these. So a tetrahedron, if I'm not mistaken, 180, 720, and then it doubles, 1440, and it doubles. And you take the 5 platonic solids, which represent base elements: earth, water, fire, rock. You take those polygons and you place them into a 2-dimensional circle. You're again you're recreating this connection graph. You then add up the degrees of these platonics, and it actually adds up to 7,920 degrees, which just so happens to be the diameter of the Earth. Now, just like you just said, that adds up to, like, I think the accuracy of 99.97% in miles.
But see, they didn't know about that at the time, so you can always find coincidences.
Yeah. And then you have, say, the Moon diameter in miles, 2160, which is incredibly interesting. The fact it's 2160 because each age in the zodiac is 22,160 years, and you have 12 stages of the zodiac. That gives you then the master cycle, 25,920 years. Again, 9 and 9. So you mentioned the squared circle, and the relationship between the Earth and the Moon is actually the squared circle. The exact same squared circle that Da Vinci, the Vitruvian Man, references and speaks about. And one of the things that ties back into these number plays of 3, 6, and 9 is that with the Vitruvian Man, if you take the belly button as the center of the circle, and then you measure from the belly button up to the top part, the distance is 50/40, which again adds up to 9. But if you then take the Earth diameter, 7,920, the Moon diameter, 2160, you stack them, the distance between the center of the Earth to the center of the Moon is 50/40. You then take 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8, that gives you 36. 3 plus 6 gives you 9. But what's interesting, almost scary, is if you multiply these first numbers, 1 times 2 times 3 times 4 times 5 times 6 times 7, it again gives you 50/40. So there seems to be like this relationship where you could just do some relatively simple maths, as long as you know how to add numbers together and divide numbers together in the right patterns and sequences, that ties into all of these things, and it actually does tie into the squared circle and what Da Vinci was speaking about with the Vitruvian Man. It's just these numbers just seem to keep on reoccurring when I'm looking into it. So then I see with Wolfram, with the 110, which you very much pointed me in the right direction to Wolfram's work. Wolfram is speaking about using certain primitives zeros or ones, on or off, red, white or black, to it's organized chaos. Maybe is organized chaos the right word, the right term? But ultimately, it's kind of what it is that he's getting at.
Chaos and randomness are two different things. So chaos is a particular mathematical description of how certain events work. Now, we're not talking something that is stochastic, but can appear to be stochastic. So looking at the weather or things like this. Now, to us, predicting these things becomes difficult. The stock market, for instance, we treat it as a random walk. It's not really. It just is a good approximation in a short term. So lots of people like to be chartists and sit there and say that they can predict what's going to happen 6 months out, except what you're not taking is the unknown, the unseen, and other such things. So chaos is extremely complex. That's where people go wrong. And we're not just talking, I mean, the reality, it's not the butterfly wing or anything like that. It's everything.
Yeah.
So yes, that butterfly wing does change things, but it doesn't create a hurricane. It just alters something that alters something. And yes, if that butterfly didn't exist, it may make a difference at some point. But I mean, the Lorentzian idea of chaos there is very small fluctuations can end up with very big differences in results.
Yeah. And is that what Wolfram is getting at with the 110?
In part. I mean, it's not just 110. There are a whole series
there's more
of
rules.
things.
In fact, what is the difference between Rule 30 and 110?
Rule 30 is fairly much a random pattern. It's very good, and I mean, nothing is perfectly random. There's probably explanations behind many other things that we don't understand in quantum, but it's a very good random generator. On the other hand, 110 is effectively a very simple Turing machine. It's a way of calculating any number, so with enough time, enough effort, and enough tape. Now, what people don't get is some of the areas, like in physics, there is a concept called quantum time. So even time can be quantized, which sort of gets into a weird realm of ticks. And interestingly enough, a non-scientist, a now deceased author, Terry Pratchett, did this very well in a novel he had, Thief of Time, where he had sort of that moment between the ticks. And that might be in the order of sort of 10 to the negative 29 or so seconds or something like that, maybe smaller, maybe whatever. It's not quite the same as meters. But the reality is we're talking phenomenally small amounts of time that once you get to that point, it actually becomes quantum. And describing a binary state in the universe, it's beyond our mathematics, it's beyond our ability right now to actually comprehend. So this is why some people, like you were mentioning earlier to me, Elon Musk and others, love this idea of a holographic universe, because what if we are projections of a bigger computer program? Well, if we have quantum at that level, then maybe. But at the same time, there's no real time per se. It's a change in entropy in the universe. So it's not, unfortunately, we're taught many things wrong to get us through to a certain stage. Professor Cohen put it best when he said, the lies we teach children. So when you're in primary school, you learn a lie. When you get into high school, you'll learn a new lie. When you get into undergrad, they teach you a lie. And then as you go up, you learn that the lies were actually there to get you to a approximate point so that you could learn a new lie.
Yeah, I definitely see that. So with the Wolfram 110, how important is that to Bitcoin's network? And what is its real role? Because I remember you stating that this was running in Bitcoin up until 2 years ago. No one knew about it. In fact, everyone's gone off to achieve Turing completeness elsewhere, or so they think. But yet it's been baked in Bitcoin since Genesis, and no one's known about it. So why was it put there? What was its function, do you assume, for the founders to put it in there? And why is it important?
The nature of a 110 machine and the testing of that was actually directly as a result of proving sort of a Wang B machine. Now, back in the 60s, there was a computer scientist back in the early days who worked with people like Minsky and whatever else that most people have forgotten by now. And Wang came up with his B machine. A B machine is effectively a worm-tape Turing machine. What it is a tape that is read-only in one direction, but write forward. So, and he proved that you could actually make a complete Turing machine that would act over discrete tape units where it could read backwards, but write forwards.
Okay. So, if we're talking about reading backwards and writing forwards, again, this is something, are we talking about polarities? Because you're playing with these numbers. I know there's one of the, if I was to re-simulate and play with these numbers, the pattern of 3 and 6 and 9, and the patterns of 1, 2, 4, 5, and the rest of the numbers, playing with the orientation of the sequence actually gives you that duality. don't even think duality is the right term. If I can liken it to the yin and the yang, right, that's considered a dual symbol, a duality symbol. If you don't factor in the S-curve, and S-curve being 9,
it's more to prove that anything computable could be computed. Now, that doesn't mean that anything can be computed. Gödel showed us that. I mean, there are things that...
incompleteness theory.
Yeah. I mean, for instance, there are things that are true but cannot be proven to be true. And we know that. And there are statements that are logically sort of illogical. Yeah. And many other areas there. So a computer can't do those. And the concept then is whether a computer can do everything we need it to do approximately or not. And where does that leave us? Are we Turing complete as humans or more? And that's always an interesting one. And then what can we and can't we calculate using a blockchain, and what does that actually mean? Now, if we can actually effectively calculate anything, that doesn't mean that we have to do all the calculations. That's where people go wrong. We can actually prove a point of a calculation, and then not even a zero knowledge proof, but just a pure knowledge proof allows us to actually have distributed oracles. And that doesn't mean, by distributed oracle, I don't mean everyone in the world. I just mean 2.
Yeah.
It means we can actually have multiple systems doing all sorts of calculations on that allow privacy and much more. And the reality is, if we have competing oracles where we have 2 individual machines, neither of which know about the existence of the other, we can actually make a perfectly provable, secure system. Now, to do that, what we need, of course, is more than 2 oracles and more than 2 players. So it doesn't work well if there are 2 oracles and me. Mm-hmm. But if there are 10 oracles and 10 parties wanting to do calculations, we're already at the point where any 2 oracles will not be able to collude with another one to actually get an answer. Now, in the Ethereum world of perfect security, they will come up with the fact that that can be cheated, because I could go up to the oracles and tell them of my existence.
Yeah.
But if you actually think about that statement for a little bit, I know of my existence. I mean, I'm not trying to hide from myself. Mm-hmm. And this concept of perfect security where I'm private even from my own knowledge, I'm not really quite sure if that fits in our universe.
Yeah. So just going off the back of what it is that you just said there, so are we talking about a self-evolving computational system that is just building an infinite equation of randomness within?
No, Turing machines are not infinite. That's an error that came about in the 60s. Turing didn't actually say that they were infinite. That was actually a comment from a later 1940s sort of presentation that was taken out of context. Turing said unbounded. And people don't...
So given the right conditions, would it run indefinitely then?
Indefinitely, but not infinitely.
Okay.
There's a big difference. I know mathematicians like to use to infinity, but that's just a little trick to simplify things because the error rate's so small we don't care. The reality in any of this is a Turing machine is an unbounded thing. Now, there's a simple answer to that. If you look at the initial postulate by Turing, and even go back to Church and others, then you're talking about a calculation that can be computed by a calculator, a human, a computer, at the time, before machines, because that's what a computer was back then. It was actually a human with a piece of pen and paper. And they were saying they weren't focused on on the not halting problem. It was the other way around. People have flipped it on its head. It is, can this equation end? And you knew a program was Turing complete if it ended.
Yeah.
Now, the problem in a halting problem is that we cannot necessarily tell whether, for any arbitrary input, whether even modestly sort of complex program is going to end. There are so many ways things can go wrong. 10 go to sort of 20, always never ends, not Turing complete. Add a break condition, and it can be Turing complete if someone interacts. But basically, a predicate is always Turing complete. It's a program that is Turing complete.
Okay.
So people are mixing up the concept of a machine that can run any script that is Turing complete, no matter how long it is, with what actually a Turing complete script is. So I blame universities for this, and the fact that computer science doesn't really teach computer science anymore. We don't have a lot of math in there. Algebra and things like that have gone away.
Yeah.
And I find very few people who even get the concept difference between unbounded and infinite.
Yeah. So how does this tie into the network model of Bitcoin and connections and edges and vertices and density? How does this influence that, if at all?
If we want one system that can become a global commercial backbone, and not just for now, but going forward, we need something that can be as universal as a meter. It doesn't matter, it's the same for everyone. If you take a meter, it's the same meter here as it is in France, as it is in America. Not everyone uses a meter yet, but it's the same no matter what. And that's really what we want for money and a backbone to the economy. Now, I know many...
By meter, you're talking about the measurement?
By the measurement, yes. Because that's what money is. It's a measurement. So people talk about how much money and the economy is going to run out and all these Keynesian bits where he gives you his equation of the economy, which is a tautology, which no one seems to understand. As a tautology, it adds no descriptive value. What Keynes missed was the fact that it's not whether everything adds up, it's the amount. So if you have an economy that's worth 1, that's one thing, and everything adds up and you can move things around, it's a zero-sum game. But what if you create something new? It's more a Schumpeterian system where creative destruction makes something. Then you end up with an economy that's now 2. So all those numbers add up, and you can redistribute them differently.
Yeah.
But the entire economy is bigger, so there are more ways to redistribute and more ways for everyone to have their pie. And that's what Keynes really missed, the whole concept of growth and development. He was too back-looking. Now, if you go into old novels by people like Montesquieu, or even more well-known ones like Jane Eyre, people talk about someone earning a certain income. Like in Jane Eyre and Little Women and things like this, she talked about people with an income of so much a year. Now, that concept didn't really change. Someone with an income of £50,000 would still be describable from their grandparents to their grandchildren. Back at that stage, money didn't inflate. We had a world where people actually understood the value of goods, and goods would actually go down in price, and other things would happen. But it wasn't this concern that we have now. So it wasn't politicized in the same way. And what we want to get away from is the concept that people have developed, which is really about the state and the nation, where we think of the mercantilist idea of how much money the state has. Now, and then they can print more to say that they have more and all of this stuff. The reality is, when gold was flowing out of a country, it was because the country was doing something wrong and they had to cut back. And that was the natural check. Governments don't want that natural check. Now, what Keynes understood was the long term. And he was a very good political economist, like certain other ones like a Krugman or whatever else. And people say that Krugman's clueless. In a way he is. I don't particularly like anything he's ever said. But he's very smart. He says things in such a way that are politically palatable. And in the short term, you don't pay. So you can increase the monetary supply and change the economy. And it suits you for the next election. And that's what it's about. Long term, it destroys growth. Long term, it takes the wealth away from society. And if you think about the difference between 1% and 3% growth, and think about Einstein saying compound interest is the most powerful thing in the universe. And he was right. And if you take what 20 years of 2% growth is, and think what that is for the economy and how much richer we would be, then there's no issue of actually having to redistribute. But politically, nothing works on a 20-year scale. No one sits there going, I can wait.
4-year cycles. So you just do good for when you're in office.
So you get voted in, 2 years. And then you've got a couple of years to do your silly policies, and then a couple of years to sell for the next sort of silly policies. So it's really even a 2-year cycle.
The incentives are wrong. And then you have a monetary system with zero cost of creation, where it's debt-based, and every pound, dollar, yen in circulation is owed to somebody by somebody. And if all debts were paid off, there would be no money. So,
and yet now we have, one of the biggest problems, like everyone knows the term CDO now, but they don't really know what that means. It relates to, it's collateralized debt, but it's to do with the repo and remit markets, basically what people term shadow banking. And shadow banking was about the securitization of assets without skin in the game. So things have changed a little bit. Now banks require a whole 5% skin in the game. So if they... 5%, wow. So they've got something still to tie them to the debt when they sell off these things. But interestingly enough, we're now seeing that with crypto. Everyone jumping on board this idea of creating tokens and tokenizing things for the sake of it. That is just a more democratized version, a more widespread version of the remit market, the shadow banking industry. So all the problems that allowed us to have the boom and bust in the housing market and the false economy, we're sitting there saying now, let's pump that into tokens because we can get a quick buck.
They don't have a holistic view, they don't have a view of the whole. They just have their own agenda.
Oh, I understand it perfectly. Incentives are there for each of these people in this industry to make a quick buck and get out.
Yeah.
It's the same as the housing market.
Yeah.
There were many people in the housing market who made a quick buck, who would quickly flip houses and made lots of money. Mm-hmm. And they weren't thinking about the rest of society. They cared about the yacht that they were going to buy.
So tying this back into some core economic principles of the Bitcoin network. So we've essentially touched on what you have when you don't have a fixed supply. But with Bitcoin, we do have a fixed supply, being 21 million. And then also the stages of creation, right? So every single 4 years, it halves, etc. I know you could probably think I'm absolutely insane. I've got OCD. I'm just like Tesla. I'm going to do nice circles around this building by asking you all these questions and taking it back to 3, 6, and 9. But 21 million coins, 2 + 1, 3. Cycles of creation, there's 33 cycles of creation in Bitcoin. 3 + 3, 6. And if my theory on the Bitcoin network model is correct, and I believe that Bitcoin is Turing complete, and the network is inspired by that, and it's about connection, edges, vertices, like you quote and like you state, which ultimately, from my understanding, is that that's governed by 9. The more it is that you divide 9, you get more connectivity. Eventually, you have a network diagram graph that you can't even see the in-between stages. It's just one big, huge connection pool. That would be 9. So I stated 3 economic principles of Bitcoin: block creation, fixed supply, and a network model. 3, 6, and 9. And going back to what sparked this, Nikola Tesla, all the secrets of the universe can be found in the numbers 3, 6, and 9.
I'd add pi and E as well, but
so
I like my irrationals. And
the network one, you could say that's an engineering design choice. Even though I see that as being quite a rare engineering design choice, because you have to understand why it's a good engineering design choice in the first place. I can take that as being an engineering choice. 21 million coins and 33 stages of creation, and there's other numbers within Bitcoin. 144 blocks in a day, 1, 4, 5, 5, 4, 9, and there's a few others as well in Bitcoin. Those are conscious decisions. The designers clearly must be aware of these relationships. Where they would derive from, arbitrary, right? It could be different. I'm coming at it from a different angle. Other people you're coming at it from one angle. There's other different ways of looking at this, but ultimately coming to the same outcomes. I think that's what's interesting, is there's different takes and different ways of looking at it, but ultimately coming really back down to these base numbers. Same with Wolfram, etc. So when I look at some of the diagrams that you've brought up, do you just mind like talking us through what exactly this is actually showing with the diagram? So what we've got here on screen is we've got the Bitcoin network model versus the mesh network model for using Lightning as a reference here. I believe this was Arnhem. You showed this talk,
yes.
These slides.
So this is actually some of the mathematics behind Bitcoin, which I'm doing as part of another PhD at the moment. I'm enrolled in CNAM, which is in Paris, which is actually interesting as a little side note before I come back, which is the place where the tennis court parliament happened in France. And then they formed what they wanted to be the first university for anyone who was smart enough, even though they didn't have money or whatever else. So not so much in a socialist manner, but the idea of being able to earn your right because you're smart. Now, going back to any of this, what we're talking about. So what I'm working on, unfortunately, the mathematics aren't there to really describe it the way I want yet. So that's part of why I'm doing the PhD. The Bitcoin network is a near complete network in the center. So the miners are incentivized to form a complete ring. Like it or not, that's how it works. Then we have two other layers. We have what I call type 1, 2, and 3 nodes. So you have the mining nodes as type 1, which are the near complete. And then you have more small world, which would be the business nodes. So that'll be SPV and other things where they need to know with a very high level of certainty, but they're not competing to get blocks or transactions. They don't really care about blocks, they care about block headers, and they care about transactions, and they care that they can validate things quickly.
So if you come into, I'm Lamborghini, you come into Lamborghini, I want to make sure before you drive away in your nice V12 700 horsepower car that I got
You
paid.
haven't cheated me, yeah.
But you don't give a shit really walking into Lamborghini if they give you the key prior to that confirmation. Okay.
Then we have the nodes that can pop on and off of the network at will, that don't matter at all, that don't really do anything to propagate. They're the Raspberry Pi nodes, the SPV nodes, the nodes on people's phones. And there's now an actual Android SPV node finally, where it actually does download all the headers, which runs on actually an Android phone. So that came out just in the last couple of weeks. Proper SPV, not requiring servers or anything like this. Now, the difference there is what you have in the type 3, the SPV type nodes, is a very sparse connectivity. We generally find that it's a log n sort of maximum connectivity, where we're talking log E. So if we scale to billions, then our sort of maximum number of connections would still be in the order of 20 or so. On the other hand, we're talking very highly densely connected on the center of the network, and maybe 50,000 nodes would sort of be in small clusters of nodes forming the dense center ring. Now, if we look at what we have for a sparse node plus a center, we have what was published a little while back in Nature, a decade ago or so, called a Mandela network.
I've looked into that.
Except Bitcoin, which is really...
That's actually one of my questions, but yeah, please continue.
So that is sort of the dual layer. But Bitcoin's a little bit different. I haven't thought of a name for it yet, but it's a tri-layer network.
Yeah, because you say it's beyond small world, right?
Yes. So you have a combination of a sparse network with a giant node hub that is a single giant node and fully connected, plus highly connected sort of grouped nodes that are more like a random sort of process, Erodos type network. And the three of these actually work in conjunction. Now, we came out, there was a Microsoft paper on red balloons and Bitcoin. And one of the things that I can show mathematically is, even though your connectivity, like, it depends on what you're considering. If you want it to a block, that's actually incredibly high. If you want it a transaction to any point in the network, though, is always a distance less than 3 or 3 or less. And it's fairly much a binary depending on where you're connected. So if you connect directly to a mining node, then fairly much you have a network distance of maximum of 2. No matter how sparsely connected or how infrequently you connect to the network, that's what's going to happen.
That dense.
Yeah. Your worst case will be 3, where effectively you pull up a business or mining node, and then someone else has maybe a mining node and a business node or something like that, and maybe there's 3 hops, but your maximum distance ever on the network is 3 hops. Now, and generally it's 2 for anything there, and you don't even get, and for the majority of sort of what you care about, getting it into a block, then it's you and all the miners, and then the miners propagate it to everyone else. So if you care about the idea of everyone on the network validating your transaction, then you're looking at a distance of 3 or less. If you care about the miners doing this, then you're looking at a distance between 1 and 2. Now, the interesting thing when we're talking about this is the guys in Microsoft actually came out saying Bitcoin was broken because to be not able to be Sybil, to be secure, to not have problems like selfish mining, whatever else, it would need a distance of 3 or less. And it does. And so unfortunately, I can't just pop in a bunch of mathematics to demonstrate that, in which case I wouldn't be doing it for a PhD anyway, because it has to be new stuff. But I still haven't figured out what to call the network. But it's not a Mandela network. It's like a layer above that, a something. Yeah.
So this is really the crux that I wanted to get down into, because I think by having this discussion, and I appreciate to the listeners how dense a lot of the terms that we used are, but if we're unwilling to discuss this, then the narrative is never going to change. People are never going to see or be at least inspired to look into what it is that we're discussing today and come to their own conclusions. Because one thing that massively influenced me on this journey was when I was applying this logic to SegWit, when I was applying this logic to Lightning, I was initially pro these solutions, but then I started applying this logic and it just kept falling apart for me. It just kept falling apart. So why is it so important to preserve these principles and these qualities in Bitcoin? And if we go back to your statement of Bitcoin being the first biologically inspired network, and we think of biology of cellular construction and then viruses infiltrating that cellular construction, how does this tie into that? And how do these different scaling solutions increase the attack surface area for Bitcoin from a virus and biological standpoint?
If we look at how Bitcoin works, then over time, you need to add more and more transactions. As the network grows, it becomes hungrier, we could say. The reason is it stops being fed as much. So when it's a babe, it has large inputs. It has 50, then 25, then now 12.5 block rewards, which get smaller and smaller over time. And these are enough to incentivize miners at the start, because there's no real use or value. But as they get smaller and smaller, then the external cost of transacting Bitcoin versus the amount on chain, whatever else, means that you have to have on-chain transactions. It's actually can't work otherwise. So Bitcoin, part of why you hear things about from Core saying how they want to change the block reward schedule and flatten it out and whatever else is because they're starting to realize that they have problems with how they want to do scaling. And if you want Lightning to work, you can't have a sort of block reward halving every 4 years. So
just to that part, I really want to visualize this for especially the people who might be listening to this on Spotify or iTunes with no visuals. So ultimately, what it is that you're speaking about there is having. So when you was explaining that, all I was getting in my mind was frequency. That's all I'm getting in my mind. The balance between these certain principles to maintain that harmonic resonance, which is what I'm seeing here, which has got a very clear geometric pattern. You distort one of those, block production, you're going to skew this frequency isn't going to look like that anymore. Bitcoin is an ecology. Now, people say miners will centralize. To a point, yes, but that's the idea. Go back to an old post in 2010 where nodes will end up as specialist machines on data centers. That was always the way it's going to work. Even if it was always on CPUs, then someone on a big sort of machine running a supercomputer still wins. It's more efficient, more cost effective. So in time, that's always the outcome. You can't get away from it. Now, what people don't understand is it doesn't go down into a monopoly, as people say, of one player. It can't.
The reality is monopolies only exist when government intervention happens. I'll get back to the Bitcoin bit, but as a side, for instance, in the 1850s, 1860s, there were actually competing railways, and they were successfully competing. It was intervention from a number of players who wanted to regulate the market that altered that. So the California to Chicago, in part, yes, and they actually regretted their decision after things. They didn't realise that they were also competing with shipping and then later trucks and all these other things. So they killed off their own market, but. The California to Chicago rail, for instance, there were three main lines, each owned by different players. And that actually allowed them to compete. And that was the problem. The bigger player didn't want to have to compete. They wanted to think they could make a monopoly and capture everything, and it didn't work. The same thing happened with Standard Oil. Standard Oil tried to monopolize everything. It actually started the process of buying up refineries. But he thought he could actually own all the refineries in America and thus be able to control prices and etc. Except what happened was a group of smart people in America started making refineries. As soon as sort of Standard Oil came in to buy a refinery, they would make another one. So as fast as he was buying these, and it became unprofitable for him to actually, he just gave up because he couldn't buy all these things and make profit. But these other people knew that he would buy them, so they were just making them. And they weren't even caring about quality, whether it would last 5 years. They were just throwing out refineries next to existing refineries, just knowing not that they'd ever compete, but they'd get bought out. So that's the interesting thing people don't realize. Competition works that way. So this, getting back to Bitcoin, is how things work. If we have, say, 10 miners, and 2 of those miners aren't able to keep up. At the moment, we have a profitability margin that has allowed all 10 miners to stay competitively in the market. If we now have larger blocks being sent, and some people haven't upgraded their hardware, they don't have the business processes, whatever else, they're marginally profitable, whereas some other people are highly profitable, then what will happen is the marginally profitable guys will drop out. And let's say that we push the block size up so that we really centralize and we now only have 6 players left. So we've gone from 10 to 6. Terrible, I know. The world is centralizing. Well, what we now have is we have 6 players earning more money. So because there's more transactions, they now actually have more. But even if we say the same block reward and the same value, and we don't even increase that, now say we have an amount paid of 600 units. Before, if we divide that by 10, each miner got 60 units, and some were profitable, some were more profitable. Now we have 100 units. So those profitable miners, even though their costs have increased marginally, maybe they're 70 now, are now far more profitable. The fact that the industry now sees a highly profitable industry attracts other people into it. This is how the whole industrial sort of complex of businesses and investment works. Suddenly you have people earning 40% profit margins. The first thing that happens, new miners come into the industry.
Yeah. We've actually seen some validity behind this. I think one of my guys downstairs, a combination of devs and analysts, ran some numbers on CoinGeek's mining efficiency. I think at the time, this might be wrong, so please by all means correct me if I'm wrong, 33% of the network, but yet producing 40+% of the blocks, which was considerably more efficient than everyone else. I'm not going to ask you how, why, secrets, I imagine. But definitely, if you look close enough, you can see validity of claims and statements like that, which is cool. So how does this then tie into where I really want to bring this conversation up to? Because I can imagine both of us could go on about this stuff for ages. Because we're actually surface dwelling right now, believe it or not. This goes very, 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 very deep. So bringing this really up to present day and talking about potential coming hash war, the difference in philosophical approaches to Bitcoin and how that influences scaling, and then how that influences, say, my position in this space and what Bitstocks is all about, strictly from a business owner's perspective, and having to navigate and chart these political issues that we're having in Bitcoin right now. So how does skewing these clearly harmonic economic balances, how does skewing this affect the network integrity for alternative scaling solutions? And why do people need to be aware of this? Because the big problem that I have with the crypto space, and it's actually got to the point where I'm actually beginning to find it quite difficult to go to conferences, because there's so much misinformation being propagated out there as fact. And we have a societal complex that is indoctrinated by Twitter and the messiahs on Twitter who have all of these followers. Therefore, the amount of followers must equal a certain degree of intellect, which is not freaking true. Completely not true.
Not at all.
So people don't want to do their own critical thinking and outsource their own to these Twitter messiahs. And then I see that being reverberated at the majority of conferences, and you just have an abundance of misinformation out there.
We have the whole idea that institutional investors are going to swoop in and save the market. Except none of these people actually understand that after Basel III and the Accords after 2009, these investors actually have requirements on what they're allowed to invest in. So institutional investors, they have a VAR, a value at risk metric. They can't invest in Bitcoin at the moment. Sorry. They can't invest in an EFT in Bitcoin. Sorry. It's volatility. Basically, if you're looking at, for instance, bonds, a double A minus, you have to have 40 times the amount of capital holdings. So to get to something as volatile as Bitcoin,
capital requirements go through the roof. Basically,
you would have to only hold Bitcoin. The fund wouldn't be able to have any other shares, anything else. The volatility in Bitcoin is just too much for them. So the way that Bitcoin core are thinking is actually the Marxian fallacy, which goes back to Ricardo, actually. It was Ricardo with the labor value of that Marx could never understand a bottle of wine and why a good bottle sold for more than a bad bottle. Obviously, he was a bit stupid and didn't like wine because, I have a hard time explaining to my wife why an 89 in wine state sells for, say, £20 and a 90 sells for £200, even though they're only 1 point different. She goes, but are they that different? I go, no, they're marginally different. But the amount of marginal difference is different there. It really cuts down on scarcity. Now, going back to what we're saying there is marginal value isn't determined by the amount of electricity or anything like that. It's putting the horse before the cart and then shooting the horse. So we're not actually putting the cart before the horse. We're putting everything in the right order and then shooting it. The way they're getting it wrong is that they're actually going back to this old fallacy that the amount of effort you put into something is determines the value. So if we put this much electricity, it was dug up again by Keynes. So here's the funny thing, all these guys running around going, we're not socialists. And they're spouting socialist theory. They're sitting there going, the amount of electricity makes Bitcoin valuable. The amount of electricity doesn't
such a strong argument against that.
It doesn't. Yeah. That's the same argument with Keynes and let's put money in bottles and bury them randomly around the country. That's not what value is.
It also assumes the standard that will remain static and static forever, will never resolve zero-point energy, which is also baked into these numbers, which is Tesla's fixation, and we'll probably come into that.
I don't believe we will in my lifetime, but
I think we will. To be honest with you, to be really controversial, I think we already have a while ago. It's just on the subject of patents. Who gets first dibs on all patents? Government. And some will be bought out in the interest of national security, and some will just be flat out denied.
Here's your problem with that argument. Every patent, whether it's granted or not, is public.
Even ones sealed in the interest of national security?
Then they're not even patented. Yeah, there are certain topics that you can't do. But that doesn't include many of the things people say are there, like energy or whatever else. That includes a very limited set of things, such as guns and whatever else, and not even all guns. Military devices, bombs, nuclear weapons, that sort of thing. The reality is, otherwise you can get it patented. Whether they then restrict you from using that patent is a different thing, but the patent is always public.
So while we're on even more fringe than the fringe that we've been speaking about, I just want to vibe in this area for the next few minutes. Because this is where I'll say I do most certainly have a difference of opinion on this subject to yourself. And so from Bitcoin's perspective and number play that I've been playing around with in terms of Bitcoin really is pointing, for me at least, in the direction of singularity. But that's one use. Tesla's fixation with the play.
See, I don't actually believe in singularity. For instance, even black holes. If you remember that time also is distorted in the calculation, then the closer you get to an infinite mass, the longer it takes you to get there. And the time equation is actually larger than the mass equation. And if you look at any infinite series, really, really hard math, and no one's done it yet, but effectively what you'll find is that you need an infinite universe to have a singularity. And if now we take Hawking radiation, then you have the creation of quantum particles, some of which are in and outside the black hole. The singularity diminishes over time, and in a finite amount of time it disappears, meaning there is no point in infinite time that it can get to, or even unbounded time. So your singularity never actually becomes a singularity. It's just a really hard math, and we cheat by going, it's a singularity.
So you said it gets as close to, but isn't really?
No. Even in mathematics, in computer science, people like to say that 2 to the 256 or 2 to the 4096 or whatever else are practically infinite. Not even understanding what that means. Practically infinite is a cop-out. So Cantor had fun with classes of infinity, which there are many. I mean, there's not just one infinity. There are actually an infinite number of infinities, and unfortunately, they're probably fractal in that he had problems proving that one class was bigger than another. Meant sometimes that he proved the orders were wrong if you took them in different ways, and all sorts of funky things with math. Going away from Cantor, though, we have the little problem that even if this is an unbounded universe, that is infinitely smaller than infinite. 2 to the 256 is infinitely smaller than infinity at all points. If we multiply that, we can put it in a box where 2 to the 256 is a single speck in a universe that is 2 to the 256 little specks.
But then aren't isn't that thought process based on a particle-based universe? Which is where I feel Einstein went wrong in his theory, in that the closer that you get to the speed of light, you weigh more than the universe itself. And
that's assuming you get to the speed of light.
Yes.
But again...
Which I actually think, and this is the other like fringe subject as well, because quantum superposition kind of debunks that we can't go beyond the speed of light if it plays out, right? That's one that...
the actual theory is we can't transfer information faster than the speed of light. And quantum superposition doesn't allow us to actually send
particle-based. If it's wave-based, it's instant. And I think this is where...
the point collapses, but where people go wrong is that you don't actually transfer information. So what you don't know is which way it was going to collapse before it did.
What is information, firstly, right? Light.
Well, no, light is light. That's not actually information. You can still...
light is photons.
It's the difference between data and sort of information, for instance. You can have a whole pile of zeros and ones, and you can find patterns in that, but those patterns aren't necessarily information. If you order them in a certain way, they become information. So it's a change of entropy. And as we actually change that entropy into something that has use, that becomes information.
So that I completely agree with. So if we take that thinking to, say, Wolfram, and just having your primitives, so a 0, 1, different orientations of what you can use as your base, it creates these different outcomes, right? Just from that same base, so a 0 or a 1. You have to have one fixed state. So what quantum superposition is talking about is being 0 or 1 at the same time, right? Or any variance of that.
But that's where you're going wrong again. It's not really either. It's the old Schrodinger's cat bit. So in the superposition, it's neither. It is a nebulous state. It is whatever the wave function is, which hasn't been collapsed yet. So it is not
exactly what I was going to ask.
Not 0 or 1. It is something else.
That's exactly what I was going to ask. So there is something that then collapses that structure, that then brings it into a position. But look, let's not go too deep into that. I'm sure we can maybe tackle that on a different podcast. But it just seems like there is so much that can be... There's so much that these numbers give you, but there's also so many questions that it raises. And I think that is the beautiful thing about mathematics. That's the beautiful thing about physics. And that's the beautiful thing about what I see with how Bitcoin has combined and utilized some of these laws or theories into a model. So bringing this back on subject into the now recent, very hot topic with scaling and the different ideals behind what is or what isn't scaling. Is this really where they're getting it wrong? Is that they don't understand these balances. They don't understand that these balances need to be preserved, and this is what makes the system
No, I think they're getting it right. I think the problem is not that they don't get it. There are many who don't. I mean, the message that they broadcast is one of don't. I think they understand it perfectly well, and they're starting to understand it more and more. The problem is philosophy. They don't like it. There was a little bitch by a certain Vitalik guy who said, if I am, then I don't want anything to do with this. And that's more of their personal philosophy. They want a false world of equality. There will never be a world of equality. No human is equal. We're not built into genetic castes or anything like this. We're all different. And that's the problem. They want something where everyone is naturally equal. But say there's a Michael Jordan out there, or a LeBron or something like this.
He must get his government salary and just play at the park.
Yeah, and then he decides he doesn't want to.
Yeah.
I had this argument on a side note with someone who basically called me evil because I said, well, I won't work. and well, then we'll force you to. And I said, well, prove that I'm not working as hard as, yeah. But going back to the other, so everyone fairly agrees that they would love to see Michael Jordan play, and they will pay him personally $1 for every game, even on TV. And he plays 50 times a year. He's really dedicated. And he earns, from 1 million people who watch him, $50 million. And he's now, from his starting position of equal, richer. So where is the unfair in that? So now we can, but he's extremely unequal. His position is now one where these other people who earn $100 a week have paid him 1% of their income, and he's massively rich. Why is that a problem? The issue now is, oh, we need to redistribute his wealth back. But didn't people actually make a fair agreement where they said they would do it? Do you need to know what I'm giving someone else to see whether it's a fair deal? I value something. I'm willing to pay for it.
Absolutely. It all needs to be baked in, because to me, all money is, at its core, is tokenized time. That's how I see it. The more money you have, the more time you have. How you then spend that time will determine if you do find your fulfillment or not. I think what's skewed is that way society indoctrinates us, or way it indoctrinates us to believe, is that the only time that you could consider freedom is post-retirement age, so 55 years plus. You look at the stats, it's way closer to 70 than it is to 50, right? So
freedom's a state of mind.
Exactly.
I've always been free.
Agreed.
I started my own businesses. I did whatever else. I ended up working for people because of things with involving companies where I'd sold or got out of or whatever else. But the reality is, even now, I choose to work. I don't need to anymore. It's not because I'm enslaved to anyone or contracted or anything, because I want to.
Yeah, you're sovereign.
My plan is I will die a very old man and fall over at my desk.
Yeah. But that's your sovereign right, and that's the great thing, because once you have that mindset, because some people could do it incredibly efficiently. Like mine is to build Bitstocks that allows sovereignty for others, banks that helps bank the unbanked, but that's not an idealistic Libby view. Yes, it's an ethical standpoint, but also it's a capitalist view. Like these are the markets that require our services the most, and that's where we see a lot of customers.
So let's think about this for a minute. Everyone chooses right at the moment. Not many people don't have enough in Britain, for instance, to not be able to save up and have £100,000 sometime in their life, house value, whatever else. Imagine that you think you can go to one of these nations where people live on $2 a day. In Africa, there's plenty of them. And I can live on $10 a day. I can buy myself a house and have the biggest shithole in the shanty. And I can still eat and have food and all the rest and never work again. And I can even hire other people to do stuff for me, because I now can afford to pay on my $100,000. I'm earning enough that I can get, say, $200 a week. And that will pay for a whole little army of people to tell me how wonderful I am. I mean, that's the mentality some people have. But the reality is they want to redistribute things so that they can stay where they are and get that. But they have a choice right now. They could go to South America, they could go to Asia, they could go to Africa, and they could take their capital with them and they could live like that, if that's a reality. But would they be happy? No. If they got money now, they wouldn't be. And this is the problem when you see many lotto winners and things like this who waste it and are still not happy. Happiness isn't how much money you have, it's whether you're happy with yourself. So this is why gross national happiness products are
However, the way that
crap.
Money skews that, and the way that money is very much ingrained in that, is that how many people could have, or to talk about the things that we've spoken about today, right? How many people have gone off and been nuts enough, crazy enough, or sad enough, however whoever's listening wants to view it, to study these things, to see what the relationship between all of this is, how it ties into our fabric of society, how it ties into our ancient history and ancient civilizations. Who's really got the time? We're too fixated with our mortgage payments, our car payments, educational payment, all of these things. So until you conquer the corporate world, until you go on your journey of...
But that's a choice. That's a not taking risk decision. So, I mean, I've got friends who are in banking and things like this, and at one stage when we were in Australia, people looked at me and said, look, you could have been worth so much more if you'd just not... I mean, I've got a master's in law, and it's in finance law, and I've got a whole lot of trading certificates and other things to do with ECP and all the rest for like international shipping and whatever else. And I even have other qualifications in finance. And I could have sat there and I qualified as a banker, and I could have become a banker and done deals and make lots of money and hated myself and whatever else. But the reality there is, short term, I would have made more money. And at many parts of my life, I would have been far better off. There were points, even 5 years ago, where my wife and I had to lie to the children and tell them that we're eating beans because it's healthy and lentils because it's good for you.
Been there. Definitely been there.
Yes, we're eating lentils tonight because we're being healthy.
So with me, I remember there was a moment growing up, and my parents came home just after going to Macros, which is a big cash and carry here in the UK. And my dad slapped down this huge box of pasta. It literally was maybe 1.5 meters in length and at least 60 centimeters. This is our food for the next few months. So been there, early stages of Bitstocks. I remember being on bees and toast for the best part of 2 months. So yeah, definitely been there.
But that's the choice, and people give up that risk, and it doesn't mean it will be successful. I mean, people like to make fun of the fact that I've got failed companies in my past. I'm proud of it. I learned from them. Yeah, I mean, this is what people don't get. It's not whether you had a company that failed. It's whether you get up and try again. I mean, if you look at Richard Branson, one of the things that really annoys me about him, he used to actually embrace his failures. And now he's trying to whitewash the story and have the look how great I am bit.
Censorship.
And it's I mean, I actually think he's doing himself a disservice. He would be better off with the story about, I have sat there and tried and failed and tried and failed, and I'm dogmatic and I won't give up.
Yeah.
That's really what being successful in business is. More than anything, it's not how smart you are, it's not how wealthy your parents are or anything. Those things all help.
Tenacity, resilience.
But it's resilience and just a dogmatic ability to latch onto something and keep trying.
People resonate with that as well. If you imagine, there's like loads of videos of Olympians who were very famous, had great promise, and then pull a hamstring on the big night. And there's this one video I remember that he refused to quit. He lost the race, fell over, got up, and continued the race. And then I think his dad runs up on the track and helps him the remainder of the way, won everyone's heart. And then you have an even more simple example, just going to the gym. What is the process of going to the gym? You train until failure, and then through failure you achieve growth. And you just continue and continue and continue that pattern. So I completely agree. Completely agree. I'm very proud of the failure. There's been a few and some funny stories around them, but I'm very, very proud of the failures that I've achieved in business because it's now allowed me to be where I am today. So absolutely 100% agree. So let's bring this up to more modern times, and then we'll start rounding things up because it's been quite a dense podcast to say the least. So the recent hash wars, just give us your view as to what is going on, the wormhole conundrum, Roger Ver with Bitcoin.com, and he's been very pro wormhole as well. Jihan, there's a
Roger just wants
split.
Roger just wants tokens, so that'll be coming anyway. So we'll see how Roger reacts after that. But the reality here is we have Wormhole being a sort of idea of moving into POS, which is proof of stake. This is why Vitalik turns up at many of the conferences, because Boone and Vitalik, sort of Boone behind Lightning and Vitalik with Ethereum, and Jihan with Plasma. The whole idea is to get Plasma, and that will save and make everything work. So we will have take the values slowly out of Bitcoin, which they say doesn't work because it's competitive and you can't keep your position, and we'll move it into proof of stake. And what that's really about is the same as any oligarch. You change the system so that you can not compete anymore and lose what you have. Now, with Bitcoin, you have to fight every day. If you stop, that's it. You lose. The amount of Bitcoin you have does not gain you anything. It doesn't do anything unless you do something with it. On the other hand, with proof of stake, then you can easily put money out there and use that to control the system. You don't need to do anything. You can then change the rules, earn, etc. And this is something people don't really get. Proof of stake favors those with money. Not in the way that the people argue Bitcoin, and I'll come back to that one. But if you have, say, a $40,000 income compared to a $400,000 income,
you've got more votes.
You don't. When you're on $40,000 and you've got a family, you can save marginally. You might be, if you're really scrimping and you cut out everything and the kids can suffer, you save yourself $4,000 a year. If you're on 400, even though you're paying more tax, then saving 100 a year is, well, I might skimp on doing that third holiday this quarter. I mean, there's a big, massive difference. Now, you don't just save the same factor. It becomes exponentially more. And then if you're earning $4 million a year, it's not, you can live easily on 400,000 and then save all the rest, etc. And as it goes up and up, you get more money that you don't need to spend. So proof of stake allows people who already have money to sit and do nothing and control the system. It allows them to be an aristocracy until it sort of degrades. Proof of work, on the other hand, why people who have already made it don't like this, why you always get the idea of cartels and government coming together, which is what Bitcoin's designed to stop, is
you always cut out the weakest member, right?
Yeah. I mean, you get to the point where we've got to keep fighting. This guy's earning more than me, but I'm bigger than him. It's not fair. So how about we make an agreement where we don't let anyone else into our game and everyone can stay where they are?
We should be recreating all the issues that we have today. And that really, to me, is one of the many, but a huge, massive component that is the genius of Bitcoin.
Yeah. So this is why, though, we also see Jihan and Vitalik and everything like that wanting proof of stake. They're at the top right now, but rather than having to either get out of the game or fight and potentially lose, because Jihan and Bitmain, I mean, if you look at top 500 companies and you go back 50 years, there's only a couple of the top 500 companies in the current list that existed 50 years ago, and we're there. So capitalism is brutal. If you don't stay on top, then basically you get wiped out. And they don't want that. They want to stay on top, but not have to fight.
So if we then make a comparison with, say, traditional companies and regulation and government. So basically what you're saying is you've got big corporations who then ultimately want to lobby, say, with government regulators.
Yes.
They bring in anti-competition mechanisms that allow them to maintain status quo.
Yes.
So they don't need to compete.
And the fact of the matter is,
status quo.
people get things wrong. They argue that we're capitalist. The world is not capitalist. The world 100 years ago was much more capitalist. We are basically in a state of mercantilism. It's what I would say is neo-mercantilism. And instead of gold, we have other things that, like bonds and treasury bonds and whatever else, that have more of a nebulous value and allows the government to hide what's happening a lot more. But it's still mercantilism.
I feel like we definitely won't get into this one, but I definitely feel like we're on the cusp of that changing. I think even the likelihood of a gold standard being reintroduced is quite probable now. So, agreed, absolutely agreed. And we'll finish on this point because this is my big, huge frustration with the space and the ICO movement that's had a lot of people be blinded and forced into divide and conquer without even realizing we're being divided and conquered. We've had 10 years to be ready for this geopolitical moment that's mounting upon us right now, where the wheels of the traditional economic system, you don't need to be an economist to see that they're falling off. And because of this infighting, because of this segmentation of our attention, we're not as ready for this moment as, in my opinion, we should be, which is why we do need to start really uniting behind projects. And when I say project, I'm really talking about Bitcoin and Bitcoin Cash.
So I'll just interrupt and say, I don't actually agree. I don't think anything's coming to a crash or anything like that. There'll be small crashes and all the rest, and that will keep happening. I don't think everything's going to end. What I think is worse.
End is different.
What I think is the economy is a cart. And instead of upgrading it and putting nice solid wheels on there and putting a Lamborghini V12 engine in there and all sorts of things, what we've done is we've kept the horses, and they're old nags now that should have been put out to pasture, and the wheels are half broken instead of doing the maintenance to fix them. So why it's worse is we sit with 1 or 2% growth instead of having 5 or 6% growth. And even if we were at 4% growth, we wouldn't have any problems with sort of wealth or anything like that. If you think of what 20, 30 years does at a 2% incremental difference, then it's phenomenal. It's going back to Einstein and his comment about the most powerful thing in this universe is compound interest.
Mm-hmm. Great. Well, I think that's a really good point to finish up on. Thank you so much for being my first guest on the Bitstocks podcast. We certainly would like to probably have another chat again in the future, touch on some of these other subjects, maybe revisit some of the points that you and I disagree on. And yeah, so this podcast will be available on YouTube, I'd imagine tomorrow, and downloadable on Spotify as well as iTunes shortly after. And you can find information on Dr. Craig Wright. I'm sure don't need to know where to find information on Dr. Wright. You can see him activity on Twitter, as well as a lot of writing on Medium. You've been putting out a lot of posts on Medium, as well as naturally the nChain website. Was there anything you'd like to say before we round up, Craig?
Only that really what people need to start considering is not any nationalistic idea of borders or politics, but remember that we're all one people and we're in one world. And that means we should be willing to open up and trade with everyone. And Bitcoin is a system that allows us to have that free global trade. Not that it exploits anyone, but it opens opportunities. Because with free trade, we choose. And if I choose to trade with someone in Africa, I'm not exploiting them for their goods. I'm giving them something that they want, and they can then use to feed and clothe and make their family lives better. And that's what we hope to find.
Completely agreed. And just on that point, everyone most certainly keep your eyes out for what Bitstocks is building. is actually very much to address that last point that Craig mentioned, and we will be making some announcements at the CoinGeek conference, which will be sharing the stage with Craig and like-minded individuals as well. So again, thank you guys for listening to this special episode of the Bitcoin Bitstocks podcast. Peace, love, and light. All the best.